Hello, this is Merrill with Tax Tutor. I'm a CPA and I've been helping business owners save money on taxes for over 20 years. I've helped clients save anywhere from $10,000 a year to over $1 million a year in taxes. You can say my purpose in life is to help business owners save money on taxes. A question that I get frequently from clients is how to treat free services, discounted services, or services that were performed but never paid for. We always have those clients that we do things for, we send them a bill, but for some reason or another, we never get paid. So we'll walk through how that works for taxes in this video. Now, all three of these items actually fall into the same tax treatment, so we can cover all three of them together and we'll give examples as we go through. So let's take free services as our first example. Someone comes to you and for some reason or another, they ask you to provide your services for free. Maybe they're a nonprofit looking for some help, or maybe they're just getting started and need help getting going. Out of the goodness of your heart, you agree to help them. You give them services in exchange for nothing in return. In that case, the tax laws are very straightforward. The only thing you can deduct is actual out-of-pocket expenses associated with the service. Let's say you have to pay for something associated with the service. So let's say like you're an attorney and you set up a legal entity for someone for free and you pay the state registration fees for them for setting up that entity. In that case, the state registration fee would be deductible, but that would be it. The deduction is limited to your out-of-pocket expenses. Similarly, let's say you have an employee that gives assistance to the person and you pay your employee for their time. In that case, the amount you pay your employee would be deductible as part of providing the service. The same thing applies to discounted services. You don't get a deduction for the difference between what you would normally charge and what you actually charged. You recognize income for the amount you did receive. So let's say that you would normally charge them $2,000 and you charge them $1,000. So in this case, you would recognize income for the $1,000 you did receive, and you can deduct again any out-of-pocket costs associated with that service. You can't get a deduction for the $1,000 you didn't charge them, and we'll go through examples of why that is. The same treatment applies if you do the work for a nonprofit. Even if the nonprofit gives you a signed letter showing you donated services are not tax deductible. If you look at what a charitable contribution is, it's either something in cash or it's like a stock donation or an asset donation. Time is just not deductible, unfortunately. So there's no deduction for that, even if the charity gives you a letter. We've seen that happen from time to time where a charity issues a letter saying, yes, they donated these services, this time to us, and we say, well, that's great. It's nice of them to write that letter, but unfortunately, there is no tax benefit for that. To be honest, I really wish these items were deductible. I provide some free services to a nonprofit, and I would love to get a deduction for that time that I spend, but I cannot. It would basically be illegal to write that off since it's not allowed in the tax code. What about services that are rendered but never paid for? It's that client that was going to pay you, you billed them for it, but they just never paid you. Can you deduct those things that were never paid? Well, in that case, it really depends. It depends on what your method of accounting is. Now, this kind of gets a little technical, but in the tax world and in the accounting world, you can either be an accrual method taxpayer or you can be a cash method taxpayer. As an accrual method taxpayer, whenever you send a bill to someone, you immediately recognize that as income. The accrual means that you've done all the services and all the work associated with that, so you are entitled to receive that income. So people that are on the accrual method, whenever they send out a bill to someone, an invoice to someone, they recognize income for that invoice at that time, regardless of whether the money has been received or not. Now, if the money is never received, then it wouldn't be fair to tax them on income that they actually never received. So even though they recognize income when they send out the invoice, if the money for that invoice is never collected, that is when they can then go and write off that invoice. So is what happens, let's say you send an invoice for $1,000 and that never gets paid. So when the invoice goes out, you recognize income for $1,000. If the invoice never gets paid, then you recognize an expense for $1,000 and your bottom line is a net zero, right? No income, no no loss, no gain, it's just zero for that specific thing. Now, if you use the cash method, then you only recognize income on cash that you actually receive. So if you never receive cash, then you never recognize income, so you cannot write off something that you never received. Let's look at some examples. We'll walk through this. So let's say you start your business during the year, and again, you send out that one invoice for $1,000. If you use the accrual method, as we walk through, you recognize income for $1,000, expense for $1,000 when it's not paid, no profit loss. In contrast, let's say you're on the cash method. So on the cash method, you only recognize income when money is received, so no income is recognized when the invoice is sent. Now, when the invoice is not paid, we cannot recognize an expense for $1,000, because if we never recognize the income from sending out the invoice, and now we recognize an expense for $1,000, we've now created a loss of $1,000 in our business. But we're on the cash method, which means that if we had a loss of $1,000, we had to have lost $1,000 in cash somewhere, in physical, actual cash or outside of your bank account. Now, I get that this invoice was never paid, and that feels like a loss, but when it comes to taxes and accounting, there really was no loss because we never recognized the income to begin with. So since we can't write off this invoice, we end up in the same place as the accrual taxpayer. We end up with no profit and no loss. So let's look at this a different way. Let's try to game the system a little bit, right? And kind of describe exactly why we can't write off something that we never received, even if we never picked it up in income. So let's say you're on the cash method and you can write off, and you could write off invoices. Let's live in a fantasy world and we can write off invoices that are never collected. In that case, it would be really easy to never pay tax. This would be the best tax planning strategy ever that I would use personally and with all my clients. So let's say your business is showing $100,000 of net income for the year and you're gonna owe tens of thousands of dollars of tax on it. Well, how could we resolve this? Well, you could simply create an invoice for $100,000, send it to one of your best customers, maybe your buddies or friends or somebody, and say, hey, I'm sending you an invoice for $1,000. I don't want you to pay it because I'm going to write it off in my business, and that's going to completely write off my income for the year. I'm not going to have any income. I'm going to show zero income, and I'm going to pay no tax. Even though I got $100,000 of cash in my pocket, I'm going to send you this invoice and write it off and get to zero. So that's why that doesn't work, why we can't do that, because every business owner would just send out invoices and tell people not to pay them. They would write them off, and good day, no taxes for anybody that way. So again, if that method worked, I'd be using it in my business. I'd be advocating it for all my clients. Every CPA would be advocating it. You would see it on the year-end tax savings tax list. Make sure to bill your clients and tell them not to pay it. It would just be a way of getting out of tax. So sorry if this message comes as bad news. If you're watching this message and you're like, I got to figure out how to write this stuff off. It's a common misconception that those things are deductible, so I wanted to clear that up. Now, there are lots of other ways to save money on taxes, so please subscribe for tax updates that can actually benefit you and your business, and also sign up for our newsletter at taxtutor.com.